If momentum continues, the next destination could be 130K and beyond. Now that we've understood the bigger picture from the monthly time frame, let's zoom into the weekly chart, where things get even more precise. The weekly time frame is incredibly useful for identifying swing trading opportunities, retests, and short-term rejection zones, and what we're seeing here is a textbook structure unfolding. As of now, Bitcoin is trading around $113,923, and we can clearly observe that the price recently broke above a major weekly resistance zone between $109,000 and $114,000. This same zone we saw on the monthly time frame was even more reactive on the weekly level. In the past, BTC tapped into this range multiple times but failed to break and close above. However, during the final weeks of June and into early July 2025, Bitcoin printed a powerful bullish candle that decisively closed above this resistance. That move marked a strong breakout backed by clear volume momentum. But here's where it gets interesting. Following that breakout, the last two weekly candles have been bearish, both showing signs of rejection from the $120,000 to $123,000 range. This upper zone has now formed a short-term resistance barrier, as seen by the long upper wicks on both red candles. These wicks represent profit-taking and potential smart money liquidity grabs at higher levels. Still, this pullback is not a sign of weakness just yet. In fact, price is currently retesting the same zone it broke out from, the 109K, 114K region. In technical analysis, this is referred to as the break and retest pattern, where a former resistance gets tested as new support. As long as BTC stays above this zone on the weekly time frame, the breakout remains valid, and bulls still have the upper hand. Looking at the broader trend, Bitcoin remains in a strong uptrend. The price structure is perfectly aligned with higher highs and higher lows since November 2024. When BTC launched its rally from the $77,000, $78,000 demand zone. That area still acts as a major institutional accumulation zone, and so far the price hasn't even come close to retesting it. This shows that buyers are stepping in at much higher levels, signaling growing confidence in the market. Technically, the most recent breakout candle in June was followed by a strong continuation, but the current bearish weekly candles could simply be part of a healthy retracement. Markets move in waves, impulse, correction, and continuation, and what we are witnessing now may be that correction phase. However, we must be cautious. If the current weekly candle or the next one closes below $109,000, the structure would shift and open the door for a larger pullback, possibly toward the 95K or even 77K level. From a candlestick perspective, we don't yet see a complete reversal pattern like a bearish engulfing or evening star, but we do see rejection candles, signaling short-term indecision. If the next weekly candle forms a strong bullish body and closes above $116,000, it would invalidate this short-term bearishness and indicate that Bitcoin is ready for its next upward leg, potentially pushing back toward $125,000 or even $130,000 to sum up the weekly picture. Bitcoin is at a critical inflection point. It's either going to bounce strongly from the retest of the 109K, 114K zone and continue upward,